Good evening, everyone. Namaskar. I am Tarun Kumar Madaan. Today, we are here to discuss a very significant topic, that is audit of charitable trust in Form 10B and 10BB. Joining with me are two esteemed, knowledgeable speakers, Manoj Fogla sir and Suresh sir. I welcome both of them. So, friends, today's topic holds a very significant importance because audit is a mandatory condition for the charitable trust to claim the exemption. And the second important reason is the recent changes in the Form 10B and 10BB. And nearly after 50 years, there is a complete overhaul change in the requirements of Form 10B and 10BB. The changes are not only in the applicability, but there are a lot many changes about the reporting mechanism to the annexures of Form 10B and 10BB and the audit report as well. So we'll be discussing all the complex issues and whatever the debatable issues are in the reporting of Form 10B and 10BB. We have divided our today's discussion into 4 parts. In the part 1, we will be covering the introduction and the applicability of audit, along with the applicability of Form 10B and 10BB. In the part 2, we will discuss about the Form 10BB and key issues. In the part 3, we will discuss about Form 10B and related issues. And towards end, in the part 4, we will take up your queries. Now, without any delay, I hand over today's proceedings to the Manoj sir.
Good afternoon, Namaskar. As Tarun has already apprised that we today are taking up the audit. Basically, it is probably the first time we are holding a workshop and probably the largest possible attendance on a forum. So how to address and handle the issue arising out of a forum. Form 10B audit is there in existence since 1974. As Tarun said, that it is almost after 50 years we are seeing an amendment. But it is not about the amendment of Form 10B. It is the amendment in the Income Tax Act, the conditions of registration, the conditions of compliance, the various sections under which unitive sections are mentioned, the sections pertaining to cancellation. And so we have been seeing so many changes in the past few years. If you see section 12A1, where we have the conditions of registration, under clause B, earlier we only had the condition pertaining to audit. Now books of account also is a condition of registration, which is quite unusual because books of account is an implicit condition for any institution offering coming for assessment, which is subject to audit. So if it is subject to audit, obviously, but not only books of account, under section 12A, it has been specified that books of account and such other documents as may be prescribed. And then we saw Rule 17AA, where we had a host of documents which were prescribed, which are unheard of for any SSC for that matter. The kind of documents, the details, location-wise details, the various documents, some of the documents practically don't look feasible, but so many documents have been prescribed, and now we cannot say that if the documents are not maintained, it is not as per the Act, because the word other document is inside the Act. So therefore, we cannot take an argument that it is under the form and it will not apply. So then how do you handle this situation? So for instance, if all the documents are not available, so do we say that documents and books as per Rule 17A is not maintained? The moment it is not maintained, the organization assessment will be assessed as if it is not registered under section 12A and section 13 and other provisions, 1310 and other provisions will apply. So now what has happened, the auditor in some sense has assumed the role of the assessing officer. And the auditor basically has to certify the various compliances, conditions, almost everything. So now the another question is that whether the auditor can certify. Now the form is such, we don't have any option. You have to write yes, no, and so on. So practically how to make sense and how to handle these challenges, maybe in times to come, we may see some relaxation in the use of the form, but for this particular year, we have identified areas how to handle. For instance, suppose you see books of accounts are maintained, but some of the documents are, as per Rule 17A, are not found to be maintained. So you have to take a judgment that whether substantively the records have been maintained or not. And the shortcomings, maybe you can qualify in the report. So where you say yes and qualify into the report, where you say yes and directly claim that it is a violation, these issues will arise in case of reasonableness of a trust board member or the list of members. Now the list of members, donor more than 50,000 rupees. These are the kind of conditions which always existed. And we have never faced in ITRs, we have never filed, and in 143.3 assessment also, we were never called for the information such as the detail of donor giving 50,000. But now, because the form is so specific, how to handle those situations, and if there is a shortcoming in the list of specified documents, then how does the auditor fall back? So the Suresh ji will be explaining you there is a CBDT circular which says that we can rely upon the information provided by the management. And regarding other shortcomings, maybe we can qualify the report. So we have methodically, because the 2 hours will be too short, we already have so many queries. So we have identified major queries and major issues. Though Suresh ji, through his presentation, will run through. The presentation is quite elaborate, but we will not go into the nitty-gritties of the Form 10. We will quickly run through in an organized and a structured manner so that we can touch upon most of the major issues. We ourselves have identified quite a few issues which are arising out of it. And as we go along, Tarun will be simultaneously picking up queries from the chat box and the question answer box, which he will explain. And then simultaneously, as we go along, we will keep on addressing. I think with these words, I invite Suresh ji to start the structure-wise presentation of Form 10B and the issues which we will take up today. Suresh ji.
Good afternoon, and thank you, Manoj ji, for setting the tone for today's discussion. As Tarun ji has said, we have structured our presentation in 4 parts. And what I did, I make a presentation in such a way so that I will give you the concept and the requirement, and that will be followed by the case studies identified by us based upon our analysis of the thing. And those case studies will be taken up by Mr. Tarun while we go along with the presentation. Because we are waiting for this, waiting to hold this seminar, just because we're waiting for the institute guideline. Because in this form number 10B and 10BB, a number of subjective issues are to be certified by the auditor as a true and correct. And then we wanted to know the institute view before holding this workshop. But as the institute is not coming out with any guidelines so far, we thought it fit to express our opinion and our views on this, how to take up this issue. And then the member can take our view and then their own judgment to take up this issue further. So let me share my presentation. Tarun, this is visible now? So basically, part 1 is the introduction, applicability of audit and key issues. And the first is requirement of audit under Income Tax Act. As Mr. Tarun and Fogla sir has already said, that getting the accounts audited and uploading it is one of the conditions for registration. And that's why every NGO want to avail the benefit of exemption has to get the accounts audited and get it uploaded within the specified date. And what is the specified date? 1 month before the due date. That means audit report has to be submitted by 30th September 1 month before the due date. And what shall be the implication? If we are not submitting the audit report, you are not getting the audit done or not uploading, then up to assessment year 22-23, this default resulted in withdrawal of benefit of section 11 and 12, and we have seen a huge demand only just because of delay in submission of form number 10B. But from the assessment year 23-24, for this default, there is no complete withdrawal of section 11 and 12, but there will be a new provision, section 1310 and section 1311, in which the income shall be computed. So basically from the assessment year 23-24, there will not be a complete withdrawal, but income shall be computed as per section 1310 and 1311. Now the second part of our presentation is filing of audit report. Which report we shall furnish and when? CBDT, we all know, has notified the new audit report format by their notification with effect from 1/4/23. And they have notified form number 10B and 10BB. And the amended rules is effective from 1/4/23. And this changes the form in which audit report has to be given. It also changes the format of audit report, and it also comprehensively changes the annexure forming part of audit report. Meaning thereby they have changed the audit report, they have changed the format of audit report, and they have changed the comprehensively annexure forming part of the audit report. All the three things they have changed. What can be the rationale? As Tarunji and Manojji has said, this form 10B was first introduced in 1973 and 10BB was effective from 2006. And thereafter we see a lot of changes in the charity taxation, and present ITR form and from the 10B is not sufficient and have a sufficient data to enable you to submit all the required details. And therefore, I think there is a rationale for this change in the form. But one thing is very, very important to be observed, because this time they are also codifying various information in 1, 2, 3. They are putting the numbers. Like for charitable purpose expense, we have to also identify 1, 2, 3, 4, 5, 6 like that. So very easy for the department to now analyze the data when we submit form number 10B, which was not earlier. So what is the change in the form? The pre-amended position was there were two types of form 10B, which was applicable for a 12AB registered trust, and there are another form 10BB, which was applicable for 1023C approved entities. So two forms with the same name, but were applicable to different type of entities under the charity taxation. Now amended position is, now there are two separate forms. Now there is no separate form. 12AB and 1023C have a similar form. And the common form is specified for both the regimes. Same name of the form number 10B and 10BB. The 10B is basically for a bigger size and a specified category of NGOs, and 10BB is for other cases. Now let us know where we said can submit form number 10B and where 10BB. So as per the notification, the notification says who is required to file form number 10B. The first condition is if the total income of the trust or institution without giving effect of section 11 and 12 or section 1023C exceeds rupees 5 crore during the previous year. That means if your income before giving effect of the exemption benefit exceeds rupees 5 crore, then the form 10B has to be used. Or if your institution receives any foreign contribution. Suppose in your case, your total income is say less than 10 lakhs, but you have received rupees 1 lakh by way of foreign contribution, then in spite of your having a receipt of less than 10 lakh, but you are subject to 10B because you have received foreign contribution. Or if the such institution has applied any part of its income outside India during the previous year, meaning thereby the 10B is applicable if any of these conditions satisfies. If your income exceeds 5 crore, or you have received a foreign contribution, or you applied any income outside India. In other cases, form number 10BB is used. So what can be the other cases? Other cases can be only where your total income is less than 5 crore without giving effect of section 11 and 12, and you have not received foreign contribution, and you have not applied any income outside India. Then only form 10BB is going to be used. Now, Tarunji, we can discuss some case law to follow on this.
So as Suresh sir explained, there are two forms, form 10B and 10BB. Form 10B is basically applies to bigger size organizations whose income is more than 5 crore or received any foreign contribution or spent any foreign amount. So there are issues involved with along with it, because suppose the organization is having a FC registration and it has not received any contribution during the year. So one of the condition is a organization should have received the foreign contribution during the year. So first issue is, if an organization is holding FC registration, but it has not received any contribution during the year, then which form has to be chosen? The second issue is, suppose it has not received any contribution, but it holds some FC assets, for example, deposits with the banks, and on those deposits, it has received some interest income, whether it will be counted as FC income and Form 10B has to be filed or Form 10BB has to be filed in such cases.
So now the requirement is that if the organization receives foreign contribution during the year, and foreign contribution, the definition of foreign contribution, it can be received from a foreign source. It can be received as income from a foreign asset in India. So bank FDR are foreign contribution as subsequent recipients. So they are not received from foreign source, but they are deemed foreign contribution. As no distinction has been made, so we have to go by whatever is defined as foreign contribution in FCRA Act. So FCRA Act includes interest income. So if the organization has received any type of foreign contribution during the year, whether directly or through from its own assets, even a single rupee has been received, to our understanding, Form 10B will apply. We can go to the third query also, that in case the organization's FCRA is cancelled, so normally cancelled organizations, they are not required to file FCRA return, but their assets vest with the government. So unless those directions have come and that matter is resolved, the government through direction, the MHs through direction may allow those assets to be treated as domestic assets. Unless that happens, it is Form 10B has to be filed, even those incomes, even in case of a cancelled organization. Organizations where the registration has been cancelled may write to FCRA support, write to FCRA support, that since they do not have any requirement to use the assets under FCRA reporting, they may be allowed to treat it as a domestic asset. So if any kind of letter is received from the government, then only Form 10B will not be used.
Sir,
Meaning thereby, if the organization files a nil return, meaning thereby they have neither received any interest or any income from the FC asset, neither foreign contribution, then in those cases, Form 10BB can be filed, provided their total receipt is less than 5 crore.
So basically, as an auditor, the criteria to check whether to file Form 10B or 10BB is to verify the FC returns of the organization. So another issue is, if one of the condition is that if you apply any income outside India, then Form 10B has to be filed. Now, whether the amount has to be in foreign currency which is to be spent, or it can be in the Indian rupees. Another issue involved here is, suppose there is a trust which is doing educational activities in India, and it hires a foreign trainer to impart a lecture to the Indian students, but the payment is made to a foreign trainer. Now, in this case, sir, which form has to be filed, Form 10B or 10BB, and how auditor can check or verify whether the amounts are paid outside India?
Now, for the purposes of this workshop, auditors should follow the thumb rule that whether the auditor is reporting violation under Section 11(1)(c). If the auditor is reporting violation under Section 11(1)(c), then it is not currency, because expenditure outside India can happen in Indian currency. You may make a payment in Indian currency in India, but that activity may happen outside of the country. And vice versa, you may pay in foreign currency and the trainer may give training in India. So currency will not be a determining factor. But as far as a violation of Section 11(1)(c), that is activity outside the countries are concerned, for which directly 115 BBI nowadays will apply. That amount has to be identified by the auditor, and automatically the tax separately will be raised on that amount which is spent outside the country. So violation under 11(1)(c) will not be related with the currency. In your latter case, I don't think that will be payment to a foreign trainer imparting education in India or through web or some other mechanism to students in India will not be a violation of section 11(1)(c). Foreign currency will not be a violation of 11(1)(c). 11(1)(c) is that if the money is deemed to have been applied outside India, that is what we have to see. There are some case laws where even the benefit accrues to India, but the money as well as the activity happened outside the country. It has been held that it will be treated as a violation of 11(1)(c), but we are not going into all those intricacies.
Just for the purpose of applicability of Form 10B, I think, Manoj, if an NGO spends outside India with the permission of CBDT, and then also I think Form 10B should be used because in this case, the income is applied outside India. Though this is not a violation, but it satisfies the condition for 10B.
Yes, but as far as this conditions of Form 10B is concerned, if the NGO is having activity outside India, what you are saying that should be followed.
Sir, another criteria to file Form 10B is if the total income of the institution before claiming the benefit of exemption under 11(12) or 10(23) exceeds 5 crore rupees, then Form 10B applies. Now, how do we see that limit of 5 crore, whether the receipts are to be computed on a commercial basis, or another important issue is because corpus donations are exempt if they are invested into the specified modes in 11(5), whether the corpus donations are to be considered to check the limit of 5 crore or not. And similar is case with the capital gain exemptions.
No. This is a most widely debated topic, how to compute 5 crore. Because the section 11 in the first sentence itself uses the word income and also the word total income. So because the word total income has been used in section 11, many professional friends believe that income should not be the income which is subject to application. But in 1968, the CBDT clarified the concept of income through a circular number 6, 1968, which is there in our book. So in which CBDT said that the term total income used in section 11(1) has no relevance to the term total income defined under section 2, subclause 45 of the Income Tax Act. So income, this commercial word sometimes creates confusion because people tend to think that commercial word might be as computed for business organizations. The commercial word is in the sense that what is actually available for application during the year. So what is actually available for application? What you have actually received during the year? We recommend the exception of all those income, just like interest income or some other miscellaneous income where TDS has been deducted. So except those income, all other income which are actually available, and you follow a thumb rule again that the income of which you are required to spend 85%. That is the income you should calculate for this 5 crore. In that income, you should add corpus donation received, because corpus donation is a pass-through entry. And this capital gain also has to be added to that, because capital gain deduction you get only after giving effect to the provisions of section 11. The 5 crore income is to be determined before giving effect to the benefits available under section 11. So only when we give effect to section 11 by reinvesting the asset in another asset, we don't add capital gain to the total income. But before giving effect, capital gain should be added, corpus donation should be added, and if there is some above the line item, fundraising expenses, etc., that should be deducted. So thumb rule 85% related income plus corpus plus capital gain.
Sir, a few queries related to the applicability. One issue is if a trust has no income or no expenses, suppose its total receipts are less than 2,50,000 or even zero receipts during the year, whether it is required to get the accounts audited. If yes, then which form has to be filed?
No, no, if 2.5 lakh, if it is below 2.5 lakh, I don't think that condition of audit will apply. So accordingly, both form would not be required to be filed.
But the condition of audit as per the constitution documents will apply. Suppose they are registered as a trust or society, that audit they have to get done. But the special purpose report, income tax audit will not apply.
So they are not required to file Form 10B or 10BB. They can get a audit as per their constitution requirement. For example, it is Section 8 company, then Companies Act audit.
Because 12A condition says if your income exceeds 2.50 lakhs.
Only then you are required to get your accounts audited. Sir, second query which is coming out, the Form 10B or 10BB only mentioned about the specific clauses of 1023C. If there are solely educational or solely medical institutions, receipts less than 5 crore, they are opting for unapproved category of Section 1023C, whether they are required to get their accounts audited.
The organizations which do not fall under the 4 categories which are subject to approval, they are not subject to any specific condition of audit. Earlier, the written filing requirement was not there, but now that condition is there, that they have to maintain books and they have to declare their income and file the returns. So I think that is the legal requirement. Audit is a recommended practice. Suresh ji?
Yeah, only depending upon the constitution document, not as per the Income Tax Act, because if they are also registered through a constitution document. So otherwise, income tax purposes, no audit requirement is there for the non-approval category of NGO.
So audit is required under 1023 only for the 4 category of institutions which require approval. Sir, last query regarding the applicability. So last year, suppose an organization was approved under 1023C and it filed Form 10BB because of approval under 1023C. Now this year they have converted themselves by opting to the 12-way registration, whether they are required to file 10BB or 10B this year because of this change.
Then they have to go by the registration they have on the date of filing of the return. So if you are registered under Section 12AB, and that is the certificate they have, then they have to follow either 10B or 10BB, whichever is applicable as per our discussion.
Now Tarunji, now for the regime purpose, form distinction has done away with. Now this 10B and 10BB is now common for both the regime. Yes. And the criteria is same. Earlier regime, the 10BB was 1023C and 10B was for 12AB, but this is not the case. And as Manoj rightly said, you have to see under which section you are came to benefit, 12AB or 1023C. Depending upon, then you have to mention in the 10B or 10BB the details of registration.
And if you are below 5 crore under 1023C, then you don't have this audit requirement.
So Tarunji, now can we move to the second?
Yes.
So now the second point we are discussing is the amendment in the content of the audit report format. This is again very, very important because what we are supposed to certify earlier or report earlier has complete change now at the amended form. So which financial statement to be examined? If I see the pre-amended position, then the financial statement were named as balance sheet and profit and loss account. But after the amendment, the financial statements have been named balance sheet, income and expenditure account, or profit and loss account. Meaning thereby they have first time income tax recognizes the use of the appropriate word income and expenditure account for the purpose of charity taxation. The second is information on place of maintaining of books of account. The pre-amended position, the auditor has to certify that the proper books of account have been maintained by the head office and the branches. But now, after the amendment, the auditor has to certify that, in his opinion, proper books of account have been maintained at the registered office or at the address mentioned at row 11 and 14 of the annexure. Row 11 and 14 is we have to submit intimation to the assessing officer at other than registered office where we are keeping our books of account and other documents. And those information has to be submitted in row 11 and 14. 11 is of form 10BB and 14 is the form number 10B. So whatever we are mentioning in those rows, the auditor has to certify that the proper, in his opinion, proper books of account have been maintained at the registered office and those places. Now, opinion of the auditor on the financial statement. Earlier, he has to express the opinion of the profit or loss of the, in the case of a profit and loss account, because the word used was profit and loss account. But now, as because the word used as income and expenditure account, so they are saying in the case of an income and expenditure account or a profit and loss account, the auditor has to certify of the income and application or the profit and loss of its accounting year ending on such date. Now we have to just notice the word of the financial statement is defined as income and expenditure account, but auditor has to certify the income and application. Now, application we all know is much more than expenditure because it includes capital expenditure, it includes repayment of loan. So how an auditor can certify income and application during the year from a traditional income and expenditure account? Again, this issue we need to be examined. And fourth major change is the certification of annexure. Up to pre-amended position, the annexure to the Form 10B was not required to be certified by the auditor. But now, after the amendment, not they have to audit, but they have to certify as a true and correct. So whatever we shall deal with the annexures, keep it in mind, the auditor has to certify not true and fair, but they have to certify as true and correct. So now we deal upon these issues once again. But before I go to the case laws, I also put down what are the format of audit report. They are saying in my and our view, and to the best of our knowledge and according to explanation given to us, the particulars given in the annexures are true and correct, subject to following observation or qualification. They are saying the word following observation or qualification, meaning thereby, as an auditor, even you don't want to qualify, but you want to observe, you can mention here. And this is very, very relevant for this year, because when we go along with our presentation, you will find a number of places. It is always better to put your observation in 1, 2, 3 here, so that you are safe to on what basis those observations have been made in the annexure. And similarly, for the true and fair view of the amount of application, again is the same format, and they give a subject to. They are mentioning different rows, and this rows can be increased up to our liking. So we need to use this time this qualification, because this is not only qualification, these are also observations. And when we go along with this presentation, you will know where to use this observation part in the true and correct of the annexures and true and fair view of the amount of application. Now the case studies, Tarunji, you can take it forward.
So, sir, now in the amended audit report of Form 10B and 10BB, auditor is required to certify that, in his opinion, proper books of accounts have been maintained at the registered office. Now, the few issues arises. First one is the books of account is one of the condition under Section 12A. If that condition is not satisfied, the income will not be computed in a normal manner, but a specified manner under Section 1310 and 1311. Now, what is the responsibility casted upon auditor to certify that books of accounts are maintained in a proper manner at the registered office? How the auditor will check that this part and certify this? Now, under Rule 17AA, it not only talks about the books of accounts, but it also talks about some other documents. How the auditor will check the other documents, and what will be his responsibility if books are maintained, but some other documents are not maintained? Along with it, another question comes in: if books are maintained in a digital or electronic form or in a cloud-based manner, what will be the address in this case which has to be reported by the auditor that books of accounts are maintained? Sir, if you can take up these issues.
Manoj, the first issue is how the auditor shall satisfy himself that the books of account. Manoj, you can.
Yeah. No. The location of books of account is a fundamental thing for the auditor, because auditor should physically verify the books of account before opining. So the issue may become quite ticklish, where an organization is having books of account at the registered office as well as various project locations, and the auditor may not have visited all the project locations. So then, if the auditor is following accepted auditing standards for auditing, then the auditor, based on his personal verifications of the locations and the certificate of the management, a declaration by the management, can satisfy himself about the address of the locations of the things, and accordingly he should put a a note in the audit report as we have discussed, because after this 10B, because most of the things are certification, the notes you write in your audit report will be your protection. Because tomorrow a disciplinary action can be initiated against the auditor for misrepresenting the fact or misguiding the department, and the vice versa from the SS's point of view. If the auditor has substantively maintained books of account, then the auditor should not say that books of account were not maintained. Because if you see the form, if you say books of accounts were properly maintained, if you say yes, then the column opens, and there also it is written whether all the documents were there or not. That means the intent of the statute is also that even after saying yes, there is a possibility that some document may not be there. So the reporting of the form also has been structured in such a way. So the auditor has to take a judgment that the books and the specified documents have been substantively maintained to his judgment. And apart from the reporting, if he is not able to find, he may qualify the other thing. And regarding this cloud, etc., I think the registered office should be the address with a note, because in some sense you have to see the agreement with the service provider. Normally agreements are signed at the headquarters. If the agreement has been signed by some branch, then maybe you have to see whether you can treat the registered office as the. So if the agreement is signed at the registered office, then the registered office should be treated as the address, and that to that extent, because it is a deemed address, so a qualification or a note should be put into the report.
And the auditor should also examine as an audit evidence, the intimation given by the organization to the assessing officer regarding the places where the books of account have been maintained.
And lastly, if specified documents are not maintained, so let me tell you, the books of account includes fundamental documents. So if you see, books of account includes vouchers, the direct primary supportings. Apart from those, you have a list of separate documents. And for those separate documents, the Form 10B is asking whether it is maintained or not maintained, even after you say that it has been yes. So accordingly, it should be reported. Suresh?
Yeah.
Sir, for the NGO specifically, the financial statement includes the income and expenditure account, receipt and payment account, and balance sheet. Now, generally, we do prepare an income and expenditure account, but specifically under the Income Tax Act, Section 11 allows the deduction of application, not the expenditure. And there is a difference between the application and the expenditure. But the audit report forms ask the auditor to express the true and fair view of the income and application. But the organizations generally prepare the income and expenditure account. Now, it is practically feasible to express opinion on the income and application based on the income and expenditure account.
Actually, because it is a special purpose audit, the organization should be preparing an income and application account, not an income and expenditure account, though the nomenclature used will be income and expenditure. This thing was there earlier also, but from this year onward, the form also has clarified. Though the word income and expenditure is used, but they said the auditor has to report on income and application and not on income and expenditure. In fact, the word expenditure is not used in Section 11 at all. The word application is there because expenditure is something which is in the nature of a charge against income. And under Section 11, in principle, only applications are allowed. So, and it is recommended and it is required that an auditor should ideally prepare an income and application account, whatever is application. Capital expenditure to the extent charged to income should come inside the income and expenditure account. Inter-charity donation should come into the income and expenditure account. by artificially reducing them to 85%. Past year deficits created out of corpus, creation of FD, that itself is also a deemed application that should come inside the income and expenditure account. And the auditor should ideally prepare the income and expenditure account, that the income and expenditure account itself is enough to fill the Form 10B as well as TR7. But the problem is that most of the auditors in the country, by practice, they don't prepare income and application account. So suppose you have not prepared the income and application account and you have prepared the traditional income and expenditure account. If that is the case, then at the beginning of the income and expenditure account, you should take a disclaimer that income and expenditure account has been prepared on conventional basis and through computation, effect of section 11(1)(a) has been given. And that maybe you have to provide it in your audit report itself, the brief computation that how you have arrived to the application reported in the Form 10B from the income and expenditure account. That clarity should come, and that qualification should come in the report, or that disclaimer should come into the report. Otherwise, a proper income and expenditure account would deemed not to have been prepared as per the Income Tax Act, because it is a special purpose audit report. Auditors sooner or later have to shift to a specifically Income Tax Act based computation of income and application. Otherwise, there will be a host of complications and it will be very difficult to handle even auditing as well as assessment. Suresh ji, this is a very critical issue. Would you like to add something?
No. What you said is, I fully agree. Just only for the purpose of clarity, if the income expenditure account is prepared on a conventional method, but it satisfies the test of application because there is no capital expenditure in that year, or there is no repayment of loan or replacement of corpus, then in your case, you may not be required to give an observation as Manoj has suggested. But in case the determining the application amount requires some other information to be summarized and picked, and that is not available in the conventional income expenditure account, and you are preparing income expenditure account in a conventional method, then I think a suitable note as an observation or a disclaimer should be made in the audit report itself.
And as far as receipt and payment to be a part of financial statement, again, it is a hugely important document, but it is not a statutory requirement. So as a part of this income tax law, it is not required. You may not prepare it, but it is a strongly recommended practice, because if you have the income and expenditure account, then at least you have a statement from which you can call out all the informations, including expenditure out of loan, corpus, and all those things. So it is a very strategic statement. It should be prepared, but not a requirement.
But whether, Manoj, can we give as a notes to account this recent payment account in cases where the application constitutes of a number of things, a replacement of corpus, repayment of loan, capital expenditure?
No, you don't have any option. If your income expenditure account has been prepared on income on a conventional basis, if you don't have income and expenditure receipt and payment account, it will be very difficult for the user of the financial statement to make anything out of it. So the organizations preparing income and expenditure on conventional basis, at least for this year, because they don't have time to change, they should prepare income and receipt and payment account.
So long we have discussed which form to be used, and then we have also discussed the key issue arising from the audit report format. Now we are going straight to the annexures, and the annexure we are taking first the 10BB annexure, because most of the professional and most of the organizations may fall under this category, and we wanted to clarify this form much in a clear terms, so that at least 80 and 85% of the NGOs are covered. So what is the content of the Form 10BB? There are 32 clauses, 9 sections, 6 schedules, and 6 notes. So when we see Form 10BB, then we have to refer 32 clauses. We have to fill 32 clauses. It is divided into 9 sections, and we have to also fill up 6 schedules wherever applicable. And while filing the clauses, we have to refer notes wherever marked in the clause itself. You refer note 1 or refer note 2. Now, what is the overview of Form 10BB? If I summarize the total 32 clauses, as per my understanding, first, under the general information category, here 11 clauses false. Second, the clauses which helps you in computing the income. Here 14 clauses false. And third clause is income not subject to application. Basically the penal provisions. Here the 2 clauses under 10BB and other penal provisions. Here 3 clauses in 10BB form, and other compliances. There again, there are 3 clauses. So under general information, we have a basic details clause 1 to 6, then legal clause 7 to 8, then management clause 9, commencement of activity, and details of place where books of account and other documents have been maintained. And to competition clause, we have a voluntary contribution, clause 12 to 20, very detailed analysis of voluntary contribution. Then income to be applied, application of income, and taxable income. This is part of the computation of income. And then person referred to in section 13.3, and whether any benefit has been given or not. And then specified violation for cancellation, whether 12AB4 specifies the violations which may result into a cancellation of the registration. These things now need to be certified. So these clauses in 10BB form may require to all the category NGOs. Under 10BB also. Under 10BB also, there may be a different category of NGOs. But these are the clauses which will apply to all the categories within 10BB form. And the other clauses under 10BB is application out of source other than income. In case some of the NGOs during the year application has been made other than the income, then this clause shall be applicable to be filled in. Again, section 115BBI, if there are certain income due to violation of compliance provisions, then this clause needs to be furnished. Then if an organization receives anonymous donation, then this clause also need to be furnished. Then claim for depreciation where the acquisition of asset has already been claimed as application, where again this clause shall be applicable only very select few category of NGOs and the TDS compliances. So basically, in short, the point I am making is the black ink mark clauses shall apply to all the small category NGOs, and the red mark clauses may apply to some of the NGOs, may not apply to all the category NGO within 12BB. Now, overview of the general information. The basic details, they are saying you have to refer note number 1 and 3, and they are saying the word auditee refers to the trust. The word auditee has been used, and they are saying auditee means the person whose accounts are going to be audited. And they are again saying we have to mention address, registered office address, and other address. The other address we have to give the other address where books of account are being maintained, not the other working locations where the program are implemented, but the other addresses which we have intimated to the assessing officer where books of account have been maintained. We have to mention those other addresses in the basic information clause 1 to 6. Now, legal clauses, we have to mention the act under which we are registered and whether we have an instrument or not. Then the management clauses, we have a 4 and 5. Again, under the management clause, the relationship under the management like author, founder, settler, trustee should be selected by the code. The note number 4 is now giving a code. And based upon that code, the author has a one code, then trustee has a one code. So you have to refer note 4 and you have to select that particular code and give while filling. And then again, you have to refer note 5 for the identification number. Then you have to mention the commencement of activities in the case of an organization having provisional registration during the year. And we understand the details of commencement of activities to be given only in the cases where the auditee is holding provisional registration certificate at any time during the previous year. And lastly, the places where the books of account are being kept, this also has to be provided. So for these basic details, what are the issues arising? Tarunji, you can take up these issues.
Sir, since as Suresh sir has suggested that for the provisional registration category, we need to mention the commencement date of activities. The reason is the provisional registration has to be converted to the regular registration within the 6 months of commencement of date of activities. Now, what shall be considered as commencement date of activities and how the auditor has to check this date?
It is the duty of the auditor to be factually correct. So now the problem is that many organizations have mentioned the date of issue of their provisional certificate as the date of commencement. And accordingly, they have applied for the regularization of registration. So in those cases, the commencement of date which has already been stated to the department, that should be treated, and an auditor should write a note in the report, because that is not factually correct. Because commencement of activity is the date from inception only. The first income and expenditure account was prepared, even a single rupee was applied towards the activity. That is the year in which it has commenced. So auditor in a note may provide that the organization had commenced maybe 5 years ago, 10 years ago, but at the time of provisional registration, this date was mentioned, and therefore that date has been issued. So this is what should be done.
And sir, clause 9 requires the details of management, which includes the settler, trustee, general body member, as well as the governing body member. So how the auditor has to obtain this list and how these details are to be mentioned? Is it required for only for some specified person or a managing trustees, or it has to be given for all the trustees? What all information has to be given here?
Now, if you see the section, the list is very comprehensive. General body member, governing body member, all are included. But by practice, normally the governing body member's name is given, and this is what has been over the years been accepted by the department also. And in some organizations which are membership-based organization, the members could be 500, 1,000, 2,000. So that way. But what the auditor should do, again, the auditor would not be factually correct. If the auditor says that these are the only members, including the name of only governing body member is given, and the general body and other members is not given, then the auditor again should in the report should qualify and say that the governing body member, as was made available by the management and subject to our verification, maybe through the minutes, books, and etc., or the reports filed to the society, or the reports uploaded with MCA in case of Section 8 company, with its own view. The auditor may write, there is a CBDT circular which says that the auditor is well within his right to rely upon the detail provided by the management. So the auditor is not required to do any forensic study of who the members are there. He can rely on the management. And if the general body members are not there, not given, he should write in the report that they were not available and not given, so that at least he will be factually certifying the correct thing. Otherwise, it will be a factual mistake, even though the practice is to only give governing body members.
Manoj, whether in the audit observation we can write, because of the numerous number of general body member, the list of only governing body member has been given, because in certain cases the general body consists of huge numbers and not possible to be mentioned with all the details. So
what I am suggesting, let this decision be taken by the management of the organization, not the auditor. So we may say that
if the organization gives you the list, 400 pages list.
So then maybe you either don't give or give an illustrative number of members, or you in the note you write that apart from the board members, there are another 100 or 200 members who have not been written in the light of things. It can be provided separately. Maybe you can write that.
Or sir, this list can be used by way of attachment along with the financial statements.
This list I don't think is required to be uploaded. What we have said now is that if the organization has not provided you the list, so you don't take on your head, you put it on the organization, and you write the factual position that in the light of several members, there would be many cases where the general body and the governing body is one and the same, coterminous general body. Their auditor can write in the note that the general body is the same. If the auditor receives a list, and if the list is a small, he may consider to upload it. But if it is practically needless and it is too large, then he may write. But I don't think this list is separately to be enclosed as a part of the audited statements. If required, based on the audit report, the department may ask for, because you never know how big that list would be. Suresh ji, should the list be given with the audited statement?
Actually, I think that note should be sufficient. But if the organizer has provided the list, if a part of the notes to account, if we give that list, and we mention that in the observation also, that that list has been attached as a part of the notes to account. So I think that can be.
Sir, while uploading the report along with the financials, there is option to do the any other attachment. In that category might be that list.
Is auditor's judgment. So
Auditor's judgment, yeah. So now we come to the next very, very crucial part of the 10BB form. And here is the clauses through which the income is computed subject to application, and the application amount and the overall taxable income. So again, we have to give the voluntary contribution, clause 12 to 20, very, very detailed analysis of voluntary contribution. Then 2 clauses for income to be applied, 1 clause for application out of income, and then the taxable income, clause 24. And then application of income from sources other than income. So we have to basically understand these clauses that will lead to your ultimately computation of income, and based upon which the assessment shall be done. And therefore, we shall discuss these slides in subsequent slides. What are these clauses talks about? So voluntary contribution, they are saying whether the OIT has filled form number 10BD for the previous year. If no, then skip and go to row number 14. That means if the organization has whether filled 10BD form, you have to say yes or no. Okay. If you have to say yes, then we have to mention the total amount of donation reported in 10 number 10BD. That amount we have to mention. Then we have to mention the donation not being reported in 10BD. Suppose an organization receives a total amount of rupees 20 lakhs, and out of that 1 lakh is not reported in 10BD. Then 10BD will be 19 lakhs and not reported will be 1 lakh, and the total voluntary contribution shall be 20 lakhs rupees. Now they are again getting it bifurcated, the total voluntary contribution. By point number 16, they want total foreign contribution out of the total voluntary contribution, out of 15. Out of 15, what is the total amount of foreign contribution? Again, they are saying out of 15, what is the amount towards corpus? That means 15 is a total contribution. It includes everything. Again, they are saying anonymous donation. That means clause 15 shall include anonymous donation, corpus donation, voluntary contribution for foreign sources, everything. And then they are saying even income applied outside India, for which the approval has been received. Again, they want to have a separate classification of that voluntary contribution. And they are saying now voluntary contribution required to be applied. And they have given a formula that clause 15, the total voluntary contribution, minus 16, minus 17, minus 18, minus 19 will be the income of voluntary contribution that needs to be applied in that year. So this way they are getting all the information of the voluntary contribution as a whole. Then they are directing which are not part of application, and then they are deriving the net amount of voluntary contribution subject to application. Now, the voluntary contribution we have derived from the last schedule. Now they are saying income other than voluntary contribution. And they are not asking for any details, meaning thereby income from trust property, income from profit and gains from business for 11.4A or 11.4 business, everything will come in single, in club together without any bifurcation. And then the total income becomes 20 plus 21, total income subject to application. So I understand schedule AI in the ITR should be referred to so as to get an idea what all should be included in the income other than voluntary contribution. Now up to this, and here again, they don't require any details of application. Only a single amount of application, including capital, revenue, repayment of loan will do in the 10BB form.
Sir, we required to report the voluntary contribution in this clauses 12 to 20. Now, whether this voluntary contribution should be reported on a commercial basis or gross basis. Suppose a NGO has received a voluntary contribution of 1 crore rupees and there is a fundraising expenditure of 30 lakhs. The figure is to be reported is 1 crore or 70 lakhs.
The fundraising expenses should be deducted. But the issue is that there are instances that whether 30 lakh, 40 lakhs, if the fundraising expenses is substantially high, then one fundamental issue arises, and in some cases, the assessing officer also has raised that suppose you have collected 1 crore rupees and you have paid 50 lakh rupees as commission or service charge to the fundraising institution. Fundraising expenditure without the knowledge of the donor. And if the organization is reporting the entire amount to the donor as applied, because so then the organization, they take gross amount and they treat fundraising expenses as below the line item. So it is not deducted because the organization, if it is 30 lakh, normally it will be difficult for the organization to claim it as application towards charitable purposes because the donor is under the impression. So it is a structural issue for the organization. We will not get into that. In principle, all charges should be removed, and whatever is a legitimate cost, that should be removed, and the remaining amount should be reported.
Sir, another issue is the capital gain, which is deemed to be utilized for 11(1)(a), whether that has to be included in reporting the income other than voluntary contribution, which is to be applied.
No, capital gains, as we said, that to compute the limit of 5 crore rupees capital gain has to be included. Otherwise, the moment you apply the provisions of section 11, including section 11(1)(a), if the entire amount is reinvested, the capital gain is not required. In the form, whether it is treated as a pass-through entry, I don't think. Suresh, is it treated as a pass-through entry?
I think it should be, because this capital gain, when the entire amount has been reinvested into another capital asset, that means this part of the income is not available for application. And that's why I think the income available for application should not include this amount, capital gain. If it is fully exempt, deemed utilized under section 11(1)(a), if it is part deemed utilized, then that other part shall be included as a income available for application.
Because we said at the beginning that what is a commercially computed income? Commercially computed income is what is actually available for application. So that is the actually undercurrent principle for computing income under section 11(1). And this is how various courts have held in the past. There are court judgment where the TDS amount, which was treated as income by the organization but did not apply it. So the court said that it was not available. It was not available, and it cannot be said that the organization failed to apply 85%. So what actually is available, if you follow that principle, by and large things will be taken care of.
Sir, another question which is coming out to be, is it to be shown before reducing that 15% deduction or after that 15%?
What?
No.
That amount.
That voluntary contribution and income, they have separate clauses. They are as per that clauses they have to mention.
And you add both, then you deduct 15%.
The sequence is like that only in the form. First, you have to derive the income to be applied, which we are discussing now. We have not discussed the amount to be applied, but we have so far only discussed the amount to be applied, the income. So income consists of two parts as per 10BB form. One is voluntary contribution and another is other income other than voluntary contribution. And that part includes every other income other than the voluntary contribution.
And just to understand technically, income computation in the Act also is found at two places. All income of a trust is computed under section 11(1), that is income from property of trust. And only voluntary contribution is brought from section 12(1), which was lettered and which is deemed income. When the Act came, voluntary contribution was not considered as income. So now, therefore, section 12(1) is there. So deemed income and income. So everything of the trust is other income. So the main income became the other income for the form purposes, but actually the other income is the main income. And voluntary contribution is income under section 12(1), which is not under section 11(1). It comes from 12(1) to section 11(1). It is deemed to be treated as income from property of trust.
Sir, a very interesting observation. If you just go 2 slides back where it is written a clause 12 to 21 clauses are written. If you can just go 2 slides back. So, sir, in this list, if you see in clause 16, they are asking the information of total foreign contributions. Otherwise, if person has received a foreign contribution, the form 10B shall apply and 10BB shall not apply. Now, in form 10BB, they are asking about the foreign contributions, sir, in clause 16.
Yeah, that is yeah. What you're
That is
saying
the
is
issue.
correct.
That
That
is the
should
issue.
not be here.
Otherwise,
That
they
should
should
not
not
be
have
here.
asked this information in the form 10BB.
That should not happen.
It is an error.
So far we have discussed how the income subject to application shall be computed, and we have also gone through some of the issues identified by us. Now we are going to the clauses, how to compute application and how to compute taxable income. Now they are saying clause 23 is saying application of income, and they are saying within bracket excluding application not eligible and reported in serial number, clause number 27. The clause number 27 says any application out of source other than income, meaning thereby here we have to put those applications which have been funded out of income, not in gross. If we are putting the application in gross here, then that will be a mistake. So the clause starts with application of income only out of income, not out of all the sources during the year. And other sources applications should be in clause 27. So application of income, out of income, and they now need this following bifurcation. The amount applied for charitable and religious purpose during the year. Then they are saying amount not actually paid during the previous year, but included in one, and amount actually paid during the year, which was accrued during this year. And that's why they wanted to know the actual amount applied on cash basis, on payment basis. So through this formula, they wanted the total amount because they are dealing with the income expenditure account. So they are understanding that the expenditure might be on accrual basis, and that's why clause 2 and 3 readjust that figure, and they are coming to a payment side. The total amount applied in India on payment basis, and that too out of income. Now they are again saying amount invested and deposited back to corpus, where in earlier years we have taken some application out of the corpus fund. Then if we want to replenish that corpus, and we are satisfied the taste of admissibility, then the amount invested and deposited back to corpus will come here. Similarly, repayment of loan and borrowing will come here. So total amount applied in permanent basis, repayment of loan, replenish of corpus, and then they are asking for clause 8-15 amount to be disallowed from application. So they have in gross out of income, they have wanting all the figures to be given here. And now clause 8 to clause 15, they are classified the income to be disallowed from application. And then the total allowable application is the total amount applied minus the disallowed portion, and that becomes the total allowable application. And then they're saying that you add 11 to accumulation in form 10, then dimmed application 9A, and then statutory accumulation form 15, and then then the taxable income becomes the total income minus clause 23 net result, and becomes the taxable income. Now the interesting part of is the amount to be disallowed, and they have given in the format what amounts needs to be disallowed. They are saying disallowed due to tedious violation, we all know, and if those disallowances are there, then we have to fill up the schedule tedious for disallowances. We have to mention also fill up the schedule. Then the cash payment exceeding 10,000, again we have to fill up the schedule here. Then intercharity donation towards corpus, if it is included in the application amount, then we have to also then disallow that amount. Then intercharity donation not having the same object. Then donation to any other person other than registered and approved institutions. Very, very crucial. We will discuss these issues in the case studies. Then application outside India for which no approval has been taken. Application outside India for which approval under section 11(1)(c) has been taken. And then applying for any other purpose beyond the object. And any other disturbances. So basically, now first we have to give the gross amount of application out of income, and then we have to disallow the auditor has to disallow based upon these disallowances specifically mentioned in the form 10BB, and then the total application amount will come, and then the taxable income shall be calculated. Now the clause 27 says if you are having application amount from different sources, then we have to mention that the income accumulate, what can be those sources? During the year, if we applied income out of the 11 to accumulated funds to discharge our obligation, then that amount will come here. If we are applying our, if we are discharging our obligation of 9A, and during this year we are spending out to discharge our 9A obligation, then that application will come under this schedule and not in the first schedule. Then the statutory accumulation, if we are funding some application amount out of your past statutory accumulation 50%, then that amount will come here. If we are spending out of corpus, out of borrowed fund, then we have to specify those sources and the amount here. Now the case study is Tarunji.
Yes.
Sir, as we know now, the income has to be applied and that is allowed on the payment basis. Suppose there is accrued interest on the fixed deposits and that interest is actually not received, but that forms part of the income side. But how that application has to be done? Suppose that application is done from the opening bank balances. Now, what shall be considered as the amount of application out of income?
And we should first understand it. The income in section 11(1) uses the word that the trust in receipt of income. So our understanding is that income was always on cash basis, but the expenditure application was on accrual basis. But that now also has been plugged. The application also has been specifically made on payment basis. For income, though section 11(1) uses the word receipt, but explanation to section 11(1), against which we have the option of filing Form 9A, includes a circumstance where the income has not been received. Therefore, in the light of the explanation, there is a kind of, in some sense, a contradiction between the explanation to section 11(1) and section 11(1), which uses the word receipt. We recommend that to make sense out of these two contradicting provisions, income should be treated on cash basis, except in cases where TDS has been deducted, where like bank interest, etc. So now coming to back, so we are confining to those type of income. Suppose you have accrued interest, no cash was available, but you have spent from your own other funds. But in this case, I don't think a cash flow matching is required. The law is not about matching the cash flow. The law is based on principles of fund accounting. Whether you have used the corpus, whether you have used the loans, whether you use the indefinite accumulation, but it is not about whether you have received cash or against that or not. So if you have declared an income of 11 lakh rupees and you have spent 10 lakh rupees, then you have already applied 85%. You need not file. You need not file Form 9A, and you can claim that the income was applied during the year to the extent of 10 lakh rupees, even though the cash flow is not available. You need not file Form 9A.
And if a person has done accumulation under section 11(2), now the amount is being spent from that accumulated funds. Is the person actually need to liquidate those deposits which were made against that accumulated funds, or it can be used from his bank balance?
The deposits have been created with a separate purpose, that whenever you make a 11(2) accumulation, that amount of funds should always be and consistently be separately available. You need not make deposit. The money may remain in your savings bank account, but the savings bank account should not fall below the amount accumulated at any time. Otherwise, it will not be treated. So if this money is available, I don't think that that particular deposit, this money should be separately available at the time of accumulation till the money is utilized. But if the organization is able to retain its fixed deposit, which are bearing higher interest and is having other, there is no cash flow matching. These are legal principles to be followed, but it is not a cash flow matching that you have to use from this bucket or that bucket. But this tied up funds should always be available in same proportion till the entire amount is liquidated. Then those tied up funds become unrestricted funds. because till the date of expenditure, those tied up fund are section 11(2) restricted investments. So the moment you spend it from other sources, other cash balances, to that extent, those FDRs becomes unrestricted investments. So this is what my understanding is. Sureshji, would you like to add?
I, I fully agree with your views, and I think there are judgments also on this, on the 11(2) FD, whether it needs to be matured before application or not. I think this fully goes with what you are saying.
Sir, now the deficit is not specifically allowed. So, sir, if you go to the previous slide. So in case of excess of expenditure over income, how to identify and determine the amount of application with the nature of expenditure out of income, since in the light the deficit is now not allowed to be set off or carry forward?
This is one of the most important question. And the clause 27 and the preceding clauses, which Suresh discussed, are totally dependent. Today in the morning also we received the query that the income column is showing negative balance after putting all the applications. You have to reduce all your applications before filling the form. In your income and expenditure account, your expenditure or application cannot exceed the amount of income during the year. So now the concept of excess of expenditure over income is a thing of past. It is no longer relevant. So there can never be excess of expenditure over income. And the expenditures which you have made in excess of available income are funded by other sources, which are reported in clause 27, which Suresh showed you just now in the previous slide. So now, if those expenditures are also included in application and excluded in 27, then the income will show a negative balance. So it's the expenditures will not be included in the expenditures. But how to handle the income and expenditure account? Suppose you have an expenditure of 1 crore, 10 lakh rupees, and you have income of 1 crore rupees. So you put all the expenditure in the income and expenditure account. Just like inter-charity donation, you put the amount, then you reduce it to 80%, 85%, because that is the eligible amount. You put all the expenditure in the income and expenditure account, then the eligible amount is the available income. You reduce that amount, the remaining amount, instead of saying that it is transferred to balance sheet, you say that the above amount only was brought. That amount goes to the balance sheet, unabsorbed expenses incurred out of corpus, incurred out of loan, etc., which will be reported in 27. So income and expenditure account, only expenditure to the extent of available income. The problem is that one option is that you can make a pro rata division. Suppose there are 15 heads in which you have made expenditure. So if you are able to do it, you make a trial balance. In trial balance, you have expenditure. So income expenditure side, you make 2 columns, 3 columns. Expenditure out of income, that will proportion, total expenditure 1 crore 10 lakh, 10:1 is the proportion. So you, in the trial balance expenditure, you can make a 3-column trial balance, where 1 column only, each expenditure only at 10/11 will be reflected in the income expenditure out of income, and remaining expenditure out of corpus. Or you can take the entire expenditure to income and expenditure account, and the remaining amount you remove it, and the net amount only goes to the income and expenditure account. I think it is confusing. I don't know whether I was able to explain it properly. Tarun, if you want.
Manoj, this issue is very, very confusing.
Yes.
And it will really a very, very troublesome task from the point of view of the auditor, and also from the point of view of NGOs. How to identify which part of the expenses, which nature of expense have been funded from which fund. So I think here we have to go to some precedents, 11, 14A judgments like those judgments, and based upon that we can derive something, and we have to make an observation in the audit report, and we have to go about this.
And then the another problem is that the auditor and the organization has to take a decision. The organization should not say that program expenses I did from income and administrative expenses I did from corpus, though I treat it as application. Technically, the organization can make capital expenditure and claim it to be out of corpus to be created. So capital expenditure now are of three types. One, capital expenditure which are eligible to be charged against income. Capital expenditure which are eligible to be charged against income can be divided into three parts: capital expenditure out of loan, corpus, and income. Then you have the traditional capital expenditure for which you don't claim application in future. So it is not advisable for an organization to say that I am doing admin expenses from corpus and I am doing other expenses. So organization should find some way, whether it makes a pro rata division or an ad hoc division, where the entire expenditure goes to the income and expenditure account and it is reduced by the proportion of the available income, and the remaining account with a suitable note is transferred to the balance sheet. So the organization and auditor has to take a call. We have just share our thoughts in this regard.
Sir, another very controversial issues regarding the inter-charity donations. So whether the donations can only be made to the registered organizations or to the unregistered organizations as well. Since now in the Finance Act 23, there is amendment as well, which restricts the inter-charity donations allowability only to the extent of 85% of the amount donated. Now, whether the donations made to the unregistered or unapproved organizations can be claimed as application of income.
If you look at the Income Tax Act and the judicial precedents, even donations made to organizations other than 12 registered organization is also treated as valid inter-charity donation. But under the current form and scheme of reporting, that will be disallowed. So the organization, if they have done, they can fight it. They can fight it judicially. They can take it up with. But as far as reporting of the auditor is concerned, unless you challenge this form, unless the auditor or the organization challenges this form in the court of law, even though unregistered organization under the act could be treated as valid expenses if it is not proved otherwise, the application auditor should only allow given to registered organization. Otherwise, the auditor has been specifically asked to report in that particular manner, though in our opinion, it is not consistent with the act. If at some point of time, this particular part of the form will be challenged and maybe the court will rule in favor. There are so many cases of various high courts where they said that the AO has to explore whether it was applied ultimately for charitable purposes. And it raises another major question that educational institution below 5 crore under 1023C, now you cannot give to them also. Though they are eligible institution under Income Tax Act, they are exempt institution, but technically you cannot give to those institutions also. So therefore, for the purposes of this 10B preparation, I think only donation to registered organization should be allowed and treated as application.
Sir, another question related to it. If a person gives the amount not to the another organization, but to some individual for example, for his medical treatment, for his education, whether that amount will be considered as a donation or a financial assistance to that person?
Any donation given to any individual, if that donation is of a reasonable amount and it can be claimed as applied towards charitable purposes. For instance, cash donations were given during COVID to buy essential items. Charitable institutions gave 3,000, 4,000 to each family at the time of COVID, low income group family who were not getting work, wage earners, etc. So it is actually not a donation. Donation normally we use the word donation when a person receives it in the capacity of a trustee to be used for a particular purpose. A charitable organization receives donation. So it is kind of a gift or a support to a deserving beneficiary. So if the amount is reasonable and if the beneficiary is deserving, it can be treated directly as application. It need not be confused with donation or anything else.
Sir, it is a very well settled law that if you are giving an inter-charity donation, it should be to organizations having a similar objectives. Now, what shall be the implications if an organization make donation to other organization which is not having a shared or a similar objectives, or the another organization to which donation is giving, it has applied beyond the objects. Now, what shall be the implications in this?
This you have to carefully understand. Basically, if an organization is an educational organization, if it is spent for medical purposes, normally it was not a violation of the Act because both purposes are permitted under Section 215. But now the Section 12 AB 4 specified violations. Under specified violation, the first violation says that if the organization is not spending money according to its own object. So even if the object is otherwise permissible under Section 215, but if the organization has not declared or included that object in its memorandum of association, then such expenditure now are specified violation. Whether this provision is arbitrary or a rational provision, that is a different question, because how can an expenditure be a specified violation if it is otherwise permitted under 215 only because it was not declared in the memorandum and articles of association. So now, after the enactment of Section 12 AB and the specified violation, I think an organization should be very careful about its own object and the object of the organization to whom it is giving inter-charity grant or support. Otherwise, it will be treated as specified violation. Unless there is some intervention from some court at some point of time regarding that, how can something which is permitted under Section 215 be treated as specified violation? So I think with this we should close this queries.
Now, the remaining clauses in 10BB form is the overview of income not subject to application. Well, there are income which is not subject to application but directly charged to tax. Then overview of the other provisions, there are 5 clauses, and there are information as regards other compliances, there are 2 clauses. So in the first category, the income not subject to application, here we have to mention the income subject to 115 BBI, the newly inserted section with effect from assessment year 23-24, and this includes income duty violation of 11(1)(b), 9A not applied, 11(1)(c) income applied outside India, not as per the CBT approval, income under section 11(3), form number 10, 5 years, filling in the conditions, and accumulation in excess of 15%. Those incomes will be tabulated and reported by auditor under section 115 BBI. And again, anonymous donation in clause 26, again we have to give the details of anonymous donation. Now, the very, very crucial part of this, the other 5 clauses, the person referred to in section 13.3, we have to give the list of the person referred to section 13.3 means the specified person list. And then we have to also give the details of transactions as per section 13.2. That means we have a 2 requirement. First, we have to give the list of a specified person, and again, the details of transactions and whether any benefit has been provided to them or not. Now, number of issues arising from this also, which I'll take up in the case studies. And again, the auditor has to also report whether the specified violations, as mentioned in 12AB4, has been committed or not by saying yes and no. Again, certain issues are arising from this. Again, the auditor has to report whether a claim of depreciation, if already acquisition has already been taken as an application, to whether how much amount of depreciation is of that nature, and the tedious compliances, again, the auditor has to give. Now, so we shall deal with very, very crucial aspect of this panel provisions as a case study. How to report, Manoj, Tarun, you can
Sir, basically the section 13.3 provides a list of interested persons. It includes the author of the trust, settler of the trust, and a very important, the auditor has to give the list of interested person and if any benefit has been passed on to this person. So how the auditor will get this list and how to rely on these documents and how it has to be verified that whether any benefit has been passed or not. And among this list, person, if he is a significant contributor, that is, if he has made a donation of more than 50,000, how that details has to be reported, and not only that significant contributor, also the relatives of those significant contributor has to be reported. How it is practically possible, sir?
No, this area reporting is in some sense not practically possible, but it is a statutory requirement. So now what possibly the auditor should do, and wherever auditor is not in a position to report, what the auditor otherwise report, qualify, disclaim. So that is what we can discuss, because the requirement of the law, whether it is arbitrary or rational, that is for not for us to discuss. So now the list of people, specified people, the auditor can rely on the management. So the auditor can take the list from the management and the auditor can say that we have relied upon the list of specified people provided by the management. So that could be one way. But the issue is that, for instance, substantial contribution. So substantial contribution, that list, most of the organization may not be having, because this will run down. In organizations 80G registration, a reference of 10 BD can be given, that the substantial contribution has already been otherwise reported in 10 BD. For earlier years, it was not made available to us. So that maybe auditors should qualify. And as far as benefit is concerned, the auditor is not required to pass judgment on subjective issues. Benefit is something which is not due to a person. So most of the transactions, even if the amount is little high or low, there is no reason for the auditor to believe that it is a benefit unless there is some specific evidence or comparable data available to the auditors. This issue in context of section 13(1)(c), rent paid to specified persons, salary paid to specified person. For instance, that Mumbai Tata Trust case, including in Supreme Court, there were many cases which we have reported in our books. Let's say 6 or 7 crore rupees rent paid to the trustee. Supreme Court said that by perception, the AO cannot say that it is unreasonable. So unreasonability is something which, unless there is a direct evidence, the auditor should not take a call. So as far as benefit is concerned, the auditor should write in its main report, that we have either come across instances of benefit, then it will be reported in Form 10B. Or he will write that we did not come across instances of benefit being passed to the specified members. If there are large amounts, then he may write, in case of a particular person, 1 crore rupees was paid as salary, but in our opinion, it was not anything untoward, or it was commensurating with the qualifications and the experience of the persons. That maybe if the auditor is saying that no benefit has been given, I think the auditor should safeguard himself by putting the reason why he thinks there is no benefit, why he is saying that there is no benefit. Courts and judicial precedence is in support of the auditor that we are nobody to pass judgment. If the amount is high or low, if it is a contract and the money has passed, if the consideration should be 10 rupees, it is 12 rupees, 11 rupees. Auditor cannot pass a judgment that this is a benefit. So auditor may write some notes to support the assessing officer to make a judgment. But auditor ideally should not pass a judgment unless he gets direct evidence of benefit.
Sir, another very important issue about the reporting of specified violation under Section 12 AB4. Now, just 2 years back, they have introduced new provisions regarding the cancellation proceedings. If principal commissioner or commissioner has noticed occurrence of any specified violation, they can initiate the cancellation proceeding. Now, by way of reporting in this annexure, the auditor has been asked to report the specified violation. And not only they have been asked to report the specified violation, also quantify the amount of specified violation. Now, how to that extent it is practically possible, and whether based on this reporting, the commissioner can initiate the cancellation proceedings against the trust?
Yes, because that is the purpose of this reporting. The moment you report, to our understanding, immediately a cancellation proceeding will be initiated, because now it is no longer a discretionary power of the commissioner. If the commissioner sees specified violation, he has to initiate a cancellation proceeding. Now, specified violation, there are, depending on the violations, the type of violations. Now, auditor has to report if the organization is a solely educational institution and is working on other limbs. So even though it looks to be a reasonable thing, but the auditor should report it. There maybe he can quantify the amount also. But the auditor may not be in a position to quantify the amount when we say that a benefit was passed, because it is a subjective issue. So there we said that instead of saying that it is a violation, the auditor may put a note that these were the expenditures to specified persons, which according to us were not in the nature of benefit. So specified violation, depending on the nature of violation, the auditor has to specifically take a call on each of the violations. And maybe in one or two, for instance, the object, specified violation, the organization is not genuine. That organization is not genuine, the auditor will get into it if Section 215 applies and the organization falls under Section 1310 under auditor's report. Then automatically the auditor has also to report under this clause also. So if the auditor is otherwise in the form reported, the organization mostly carries on commercial activity, then the auditor should also report under this clause. So the auditor has to take a judgment call. Surajji, would you like to add?
Yeah, the crucial part of this, if the auditor is saying no violation, then he should also preserve sufficient document and as an evidence on what basis he is certifying that there is no violation is taking place. And that is very difficult in all those type of violations. What document and what evidence he should preserve, so he can say no. And that is why we are waiting for the institute guideline, so that all the members think in the same direction in which the institute is thinking. But I think this is very challenge area. When the auditor is saying yes, it is a challenge area for NGO, and if they're saying no, then the challenge area for the auditor to keep the proper documentation and evidence on what basis he is certifying. And I think this needs more debate and more discussion before taking a final call. So I think we have our target was to complete Form 10BB in details, so that 80 and 85% of the NGOs can be served. Now we are coming to the third part of our presentation is Form number 10B and the key issues arising therefrom. So what is the content? Now this is instead of 32, we have 49 clauses. Instead of 6 schedules, you have now here 22 sections, 26 schedules, and 12 notes. So this form is a much bigger form, having 49 clauses and 26 schedules, huge number of schedules. And what is the overview of this form? Now again, I have bifurcated those clauses under general information, GPU in business, computation of income, income not subject to application, and other panel provisions. And this consists of basic details, legal clauses, management details, commencement of activity, income to be applied, taxable income, application out of sources different than income, anonymous donation, then person referred to in Section 13.3, then claim of depreciation, then tedious compliances. all these clauses are from 10BB. There is they are not new. From the 10BB, what is there? They are brought down from those annexures. Now, what are the additional clauses? The details of place of books of account. This comes in a modified manner. That was also in 10BB form. Again, here also, but in a modified format. Again, voluntary contribution was there in 10BB form. Here also, but again in a modified format. Then amount of application, that was in 10BB format, again here, but in a modified format. Then section 100BBI, that was there in the 10BB form, again here, but again in a modified format, much larger informations. And then specified violation, 12BB for much in a modified format. And again, what are the new clauses? The registration details is the new clause for 10B form. Object clause, the information is the new clause in 10B form. The GPU and business clause information is the new clause under 10B form, not there in 10BB form. Advancement of general public utility GPU category. Business undertaking 11.4. Business incidental to objects 11.4A. These are the new clauses only applicable for 10B and 10B form, not for 10BB. Again, capital asset and 11.1A. Again, this is a new requirement under 10B. Then payment or credit of to a person beyond 50 lakhs. Then other income not subject to application. Again, a new clauses. Then implication of section 13 and 22nd proviso of section 1023C. Again, a new clause for 10B. Then TDS on receipt, expenditure incurred on religious purposes, claim of deduction under section 10, loan taken or accepted 269 SS, received an amount under section 269 ST, loan repaid exceeding 269 T. So all these clauses which I marked in yellow mark, those are the additional clauses for the purpose of 10B, for which we have to focus. And we have to also focus the clauses which are modified in 10B form, which were there in 10BB in a shorter version, but in 10B in a much larger version. So this is the overview of form number 10B. Now we are already 1743. So whether we should now take up question, Manojji, or we should just take it forward further? Because now we have only 15 minutes left. Tarunji, what should we do?
I think we can just
we can start taking up key issues actually. Then
yeah, that is better. That will be better. Instead of
then questions maybe. Yeah.
So we are taking the key issues from the clause 15, 16, 17, 18 for GPU, business 11.4 and business 11.4A. So Tarunji, you can now take up this issue.
And some of the key issues, while we take the key issues, Suresh, you can explain maybe which you would have otherwise done, huh? So that we'll see.
So clause 15 of the GPU category asked you to mention whether any activity is being carried on by the auditee, which is in the nature of trade, commerce or business, referred to in the provision of clause 215. And we have to put yes and no. This is the audit requirement. Now, issue, Manoj, is when an activity shall be deemed to be in the nature of trade, commerce and business for the purpose of section 215. This is the first issue we have to discuss, Manoj.
Now, primarily, we relate this question to general public utility organization. But the principle is something which will apply to all organizations. So, a organization which is engaged in general public utility, the auditor has to see whether the organization is declaring certain income under 11.4A, whether the organization is maintaining separate books of account and itself declaring that it is engaged in certain activity which are covered under 11.4A. That is one set of trade, commerce and business related activity. Second, the organization as a part of its advancement of the main object might be collecting fees and other kind of payments from its beneficiary. There the auditor has to see whether there are certain activities which are dominantly profitable in nature, whether there is a dominant profit motive in those kind of activity. The organization is say simultaneously working with poor beneficiary as well as rich beneficiaries. So for rich people, the organization is charging substantially, and for poor people, the organization is collecting a token fee. So in that case, the auditor can estimate that that particular activity where there is a dominant profit motive, each in the nature of trade, commerce, and business. So for a GPU, two types of business. One business which is declared under 11.4a. Second, certain activity where the collection is made from beneficiary, but the auditor believes that this is done on commercial principles and no real charity is being done to the beneficiary. Those two put together will form subject to the 20%, and these two have to be computed under section 11.4a. So now this, after the Supreme Court ruling, there is no concept of having business activity under 215 separately and under 11.4a separately, that is incidental business. So all incidental business, including businesses carried on while carrying on the main activity, should be computed separately as incidental business activity. Now the 20% limit we have to see. 20% gross limit, that is a very important question. The question here is that the receipt, because when you compute 20%, so what is that 20%? How to compute the 20% of the organization as well as the business activity. So if you read section 215, the word used is aggregate receipts and gross receipts. These are the words used in proviso to section 215. So therefore, on a plain reading of section 215, we are of the opinion that if an organization is having incidental business activity, then the gross turnover of the organization should not be more than 20% of the total receipt of the organization, including the gross turnover of from such business activity. So that is how these two limits should be calculated: the aggregate receipts and the gross receipts from the business. It is not the net income from business. Some organization and auditors take net income from the business, but that is not what is stated in the statute.
Manoj, you are saying that net income and net profit shall be computed, shall be taken for the purpose of application of income, when income available for application. But for the purpose of GPU category, 20% calculation, it has to be the total turnover of the business.
As I said, just as we said that for calculation of 5 crore limit, we said that you for applicability of 10B or 10BB, for that limited purposes, in the beginning we said that how to compute that. For the limited purpose of calculating 20% under provision to 215, the gross turnover from business should be used. Otherwise, for all purposes, net income from business only will go to the overall income, and that will be the 5 crore. Suppose, let me give an example. An organization is having business turnover of say 5 crore rupees, but the income is 50 lakh rupees. Then the donations are 3 crore rupees. So its total income will be 3.5 crore rupees, and the gross turnover will not be relevant when we are computing the overall income of the organization. But 215 limit is different, the calculation will be different.
You can take it forward for the case studies.
Sir, basically there are two categories of businesses. One is under section 11.4 and one is 11.4a. So we are first talking about 11.4. So what will be the distinction when the business will be held as trust property under 11.4 and 11.4a as an incidental business? And whether there is a separate set of books of accounts for section 11.4 to be maintained, or it can be merged with the business entity of 11.4a. And another very, very crucial aspect, whether the requirement of filing of tax audit report in form 3CACD or 3CPCD applies to the business undertaking of charitable trust, because otherwise we understand it not applies, but the form as part of its notes ask for the report of Form 3 CACD.
Now, section 11.4 is business held as property of trust. Now, after the Supreme Court ruling in that Ahmedabad and Noble case 2 ruling, it is virtually impossible for an organization to create businesses under section 11.4. So the organization, unless the settler settles a business, even today, if somebody settles a business to a trust, then it will become the trust property at the time of creation of the trust. So at the time of creation of the trust, if the trust was settled to a trust, then it becomes a 11.4 business. The rest all business will fall under 11.4a, and incidentality had to be proved. So basically, most of the business cannot now be continued under 11.4a. The traditional thinking and understanding that if the income from business is used for charitable purposes, the business will be held as incidental. That has now been dispensed with after the recent Supreme Court rulings. So businesses have to be incidental. Incidental business, separate books of account under 11.4a. 11.4, it is a totally different business. It need not be incidental. It has to be separate books of account. A careful reading of section 11.4a, we are not going into that because tax audit is a very debatable thing. We have released a very detailed analysis which is available on the Taxmann website also, and otherwise we can share, and it is available in our book also. Section 11.4 and 11.4a are independent chapters, and they do not make any reference to audit to 44ab. There is no reference in the Act to section 44ab, though there are some inferences which are subject to interpretation, which we are not getting into it. So under the law, in our opinion, tax audit does not apply. There is nothing in the Act, there is nothing in the rule, there is nothing in the form. But notes to the form state that whether audit for purposes of section 11 and 11.4a was conducted under 44ab or not. So if an auditor has not conducted 11.4ab audit, I think legally they are correct. There is nothing in the main form. There is no reference of section 44ab except in the note. But by referring it in the form, the department is interpreting that 11.4 and 11.4a are subject to audit under 44ab, which in our opinion is a wrong interpretation on the part of the department. But since this form has not been challenged, and if at this stage, if the 11.4a audit has not been conducted legally, it is not a violation. It doesn't fall under conditions of section 11.4a. It doesn't fall under violation under section 13.10. It doesn't fall under violation under section 13.1 A, B, C, D. It doesn't fall under violation of 115 BBI. Even if this audit and it is not a condition under section 12A1. So it is a note. So these are the information in this context we are sharing. We can share a technical note. Now the auditors have to take their own judgment.
Now we come to the next studies. When you are taking the case studies. Now here the application has to be each purpose wise. That was not required in 10BB form. Yes. Here the purpose has to be.
1 or 2 minutes you can explain, so it will be useful.
So now the application amount has to be given. First, we have to give a donation to any other person. That means intercity grant we have to show. Again, the disclosure has to be through electronic form. Other than electronic form, we have to bifurcate and give. Then object-wise application we have to mention, like religious purpose, how much, relief to poor, like all the 7 limb. And then application which cannot be specified, categorized under 1 to 7 above. So there are certain common expenses which are not earmarked specifically to each of the purpose that has to be reported separately. Then the total application will come. And this application, which cannot be specifically categorized, is an issue. How to allocate, define or determine the purpose-wise expenditure is again an issue. Then details of application in excess of 50 lakhs to a person needs to be separately reported. Then application to be bifurcated into revenue and capital also, because here there is no segregation between capital and revenue. Total application have to be supplied in the purpose-wise, including revenue and capital. In a separate schedule, we have to mention that how much is capital and how much is revenue. And then capital asset under section 11(1)(a). So these are the disclosure norm. Now the case studies to follow, Tarunji.
Sir, since now we have to report the purpose-wise expenditure. Suppose a purpose is not defined in the Income Tax Act, or for example, if an organization is registered under a single purpose category and it is making spendings on other purpose, how it has to be reported?
No. As we have said, now the auditor has to see if the organization in practice is a single purpose, but by registration it is a multi-purpose. You go and study the object clause of the organization. Normally, even if an organization is an educational institution, its object clause will be having other objects. Then there will be no violations. There will be no violation unless it is approved as a solely educational or medical institution under 1023C, those 4, 5, 6, and 6A, those sections. So therefore, for a 12AB registered organization, the object clause is the determining factor, and the object clause should be revised. The auditor should advise. So advise and even before the completion of the audit, he may ask the organization to go for a revision in the object. But now coming, if the organization, as per the object clause, is a solely educational institution and it is engaging in other activities, then technically it is a violation under 12(4)(ab) unless they have gone for re-registration under section 12(a)(1), I think AB or whatever that section is. So that is what is the job of the auditor. So he has to see to it that the expenditure as per the audit.
Manoj, this issue was in the context of filling form number 10B, which requires the auditor to certify the amount reported under each purpose. Now, each purpose, live to poor, medical, is not defined under Income Tax Act. So how the auditor will certify this amount goes to which purpose?
No, as far as charitable purposes are concerned, the purposes overlap and it is a settled law. If you see section 8, the charitable purpose, there are very broad definition in the Companies Act, and religion is included as a part of charitable purpose in section 8 definition under the Companies Act. Under relief to poor, education. So education is if you provide free of cost education to poor children, it can come under relief to poor as well as education. But education is a broader term where for a fee as well as without fee, both can come. So the purposes can overlap. Auditor under a by and large judgment should put it under a and if the organization is working with poorest of the poor, then generally relief to poor is a safe purpose which to be undertaken. Education can only be undertaken if the organization is having degree courses or certified courses or affiliated to institution, or the children go on to get a degree. Even if he is studying in standard 2, the child will go on to get a standard 10 CBSE or HSC or other state board or central board degree. So educational institution, we have more or less clarity which is an educational institution. Relief to poor, medical, etc., there could be a lot of overlapping. The auditor can take a judgment. The organization should follow a policy that why they treat the various type of activity under a particular purpose, and they should put a 4 or 5 page a point in it that this is why the purposes have been categorized. And not only purposes, while we are discussing that, the organization should be careful about putting salary and other expenses under these purposes only. In many places, the auditor put the salary for program purposes as administrative expenses. And now with this kind of form and ITR, there would be a lot of assessment problem, and there could be 143 in one intimations also. So these are some of the thoughts we can share. The auditor has to take judgment accordingly. Suresh, you can add.
No, I think this is a very, very subjective issue. And the note, when you're talking about the note from the organization, on what basis they constitute that particular part of expense going to which claim, I think that will constitute the basic evidence in the hands of the auditor before he certifies the purpose-wise classification. Now, before we end, I think we should take only one more note, one more case study for the 1310. Tarun, you can take up this issue.
Sir, there were new insertion of sections under 1310 and 1311. When there is any violation of the condition of registration, then these provisions are tracked. For example, if audit report is not filed, or for income tax return is not filed, or if the books of accounts are not maintained. Now, there are some things which can be checked by auditor at the time of audit. For example, he can check the maintenance of books of account. But the date of audit is 1 month prior to the date of filing of ITR. How at the time of signing of audit report, he can certify that the ITR has been filed and there is no violation, and the provisions of section 1310 and 1311 will get affected.
Tarun, we have prepared some notes, maybe we can share it, that the auditor certainly cannot say that the organization whether has violated or not violated section 11 on the date of signing of the report. Because technically the ITR 7 can be filed up to 31st of December. Because the condition under section 12.1 says that both under section 39.1 and 39.4, then only there will be a violation if it is not filed. So therefore, the auditor in form 10B should report that section 1310 has been complied with. But in the main report should say that on the date of signing of the report, there was no violation under section 10 and 13. However, the date of uploading the audit report and filing of return was not due. That he should specify that otherwise, because he is not in a position to take responsibility of future conduct of the organization. So that is one part. So that at least these 2-3 lines should be written in the report. The other part is, again, we have discussed already, that can the auditor say, because under rule 17, there are 7-8 books and documents coming under the head books of account. Then another large list of, I think, 8 under other documents. So if all these 16 or 17 are not there, or if one of these 16 or 17 is not there, can the auditor say that proper books of account and documents were not maintained? So that we are saying the auditor should not say that. The auditor should take a judgment whether substantively books of account and documents have been maintained for him to form an opinion that the organization by and large is following. If they are materially not there, then he can take that no proper books of account are not there. Then basically there is a violation of this condition, and this automatically section 1310 will get invoked. So, and we have shared 1 or 2 case laws in that regard also.
So I think with your permission, for the next 10 minutes, if we can do a rapid fire, and then we can close.
Yes.
Sir, if a NGO send his staff for training outside India, so whether it will be the application outside India for filing of 10B or 10BB?
It should not be treated as application outside India, but there are some confusion regarding some expenditure made outside India in foreign currency. In some case laws, it has been held that that particular portion should be treated as application outside the country. So we are not going into that. On the face of it, it is not a violation of 11(1)(c).
Sir, organization has a receipts of 16 lakhs, but considering the difficulties of 10B, 10BB, it wants to avoid the audit thing. Can it pay the taxes and avoid this audit procedure?
Yeah, 12AB registration is there. You are saying that the organization doesn't want to claim the benefit of 12AB registration for the year.
Yes.
Technically, the organization may not avail, but I don't think the utility of ITR 7 is enabling in that, because you have to give a declaration that whether you are registered under 12AB. The moment you say yes, then automatically you get into that. So those procedural challenges are that. Otherwise, I think technically it is permissible. So this is a complex question.
If we go by strictly by the literal interpretation, then this case falls under section 1310. So even if they are not getting the accounts audited, and if they are incurring all the revenue expenditure and there is no revenue capital expenditure, I think there is no impact because they have the same amount of application. But they will not get benefit of statutory accumulation 11 to those things. So otherwise, technically speaking, they can avoid, but subject to section 1310.
So what Suresh has given a good dimension to it, that the organization, the auditors should report that the organization has not conducted audit as required under 10B, or organization should claim to be a 12A registered organization which has not.
Your voice is not coming.
Is it okay now?
Yes. It is okay now.
The organization should claim that it is a 12A registered organization, file the 10B form, and the auditors should tell the return should be filed that the conditions of registration has not been fulfilled, and automatically under 1310 the organization will be either not required to pay any taxes or very minimal taxes if it has applied the entire amount, because revenue application is permissible even if the audit is not done under section 1310.
If a society is registered under 12A, but it is solely educational, can it claim the exemption under unapproved category of 1023C and avoid 12A for this year?
That there is nothing in the act which stops the organization to claim benefit under 1023C, 3 AC and AD, because the section 11.7, I think, which says that you can either take benefit of 12AB or 1023C, does not specifically mentions only those 4 approved category organizations, and the other organizations non-approved are not mentioned. So they are not mutually exclusive. An organization concurrently is eligible to claim either 1023C below 5 crore or 12A. So technically the organization can file that return. But in ITR, Suresh ji can add, when we go, you have to give a declaration whether you are registered under 12AB. The moment you give 12AB, then it does not allow you to claim that registration. So there is a problem with the utility that you may write to the department to find a solution, or you may make an application to the CIT to allow you to file return for 1023C.
And secondly, Manoj, in this case, the NGO cannot escape the responsibility of getting the accounts audited because they are claiming to be exempt under section non-approved category and holding the 12AB certificate, because the limit applies before giving any exemption benefit. I think the audit requirement is to having 12AB registration cannot be escaped.
But the issue is that even if the organization is making audit, the conditions and the violations of the audit will not apply if it goes under 1023C. Yeah. So it will be a totally neutral thing, even if there are negative observations in the audit.
Yeah, that is true.
Sir, in case of restricted grant, which amount should be mentioned while reporting the incomes?
Restricted grant now is not, there is no scope to report restricted grant, because under ITR it is either voluntary contribution or corpus. So restricted grant has become a big issue for organizations. So many organizations now, to be in sync with the ITR 7, they treat restricted grant as a pass-through entry. By treating restricted grant as a pass-through entry, their 85% requirement and 50% also get increased. But there is no straight cut solution for restricted grant. Under the Act, judicial precedents, legal obligations even today are not treated as income. But most of the organization, in the light of the current amendments, the form ITRs have started treating even the restricted grant, unless it is a specific endowment fund to be spent over a period of time. So that the organization may have to report it under corpus and give in the audit, give an explanatory note that because there is no scope, so an endowment was received and it has been reported under the corpus. Suresh, do you see any other option of handling restricted grant?
After this ITR 7 form changes, which the voluntary contribution to be bifurcated into CSR donation, foreign donations, okay, and those all are being included as a part of voluntary contribution. I think if we don't want to create any unnecessary hurdle in the assessment proceedings, because if we include that part as an income and then we are already applying against that, there is no that we are keeping that money with us. So I think better to include that as an income.
Sir, a similar question. I think CSR amount to be reported as income or liability, that is answered. Right. Sir, like we discussed about the income and application account. Suppose a person has already prepared an income and expenditure account. Can it annex a statement of computation along with that statement? And similar is case with the Section 8 companies where they have to prepare their financial statements for the Companies Act under Schedule 3. Whether that statement can be uploaded or a separate statement has to be prepared.
No. The organizations who have already prepared the income and expenditure account in the conventional manner, they don't have any option. They should put up a statement, and a reference to that statement should be given in the audit report itself that this is the. Otherwise, an independent income and application account should be prepared. It is not legally correct to offer opinion on a statement prepared under another act. So you cannot give an audit opinion under Form 10B, an audit report under Form 10B against a financial statement prepared under another statute. So that is not legally correct in our opinion, because it is a special purpose report and the government wants the auditor to compute the income in a particular manner to help the assessing officer to do the assessment. That is the purpose of this audit and the computation. Therefore, ideally income and application account should be prepared. If it is not prepared, then the statement what you are saying should be prepared.
Sir, 15% exemption should be computed on income to be applied plus capital gain on sale of investment.
No. Capital gain on sale of investment should not be included for the purposes of 15% if the entire amount is reinvested in another capital asset. But the entire amount is not reinvested, then the entire capital gain will be added back to the income and that amount can be applied. So it is an option to whether to include capital gain or not to include capital gain. Both the options are available in the Act.
But when we include without getting it demutualized by way of investment, then 15% accumulation benefit will be available.
Sir, whether donation for festivals like Ganesh Chaturthi, Durga Puja can be claimed as application in this form?
So the organization has to see whether it can be treated as applied towards advancement of the objects.
As per their document.
As per their documents. So most of the document may not have a small amount as incidental expenses as a part of establishment expenses. Administrative expenses can always be claimed, but then they should not put it under the head applied towards object. They should put it under establishment or administrative head, a small reasonable amount that should be permissible, but not as advancement of objects.
Sir, can accrued interest on FD be part of Form 9A deemed application?
Yes, because accrued interest of FD is included in income. but you are not required to file 9A if you otherwise are in a position to apply 85%. If there is an accrued interest, you have included in income, you don't have available money or you are not able to spend it, then only you file 9A, but no requirement of filing 9A only because you have not received the income. For that purpose, 9A is not required to be filed.
Sir, since now application is allowed on payment basis, can the advance paid to the vendors or supplier or for purchase of fixed asset be claimed as application in current year?
This again is a very important thing we should understand, that advance to vendor, for payment basis, we take payment something which is recoverable as it is. So when you pay advance to the vendor against a contract or against some services, that 50% payable and another 30% is payable after 40% work is complete, then that 50% is not recoverable unless there is a violation by the vendor. So these are not advances, these are part payments. And I think they can be claimed as expenditure. The auditors should see the documentation, advise the organization to make documentation, learn to distinguish between part payments and advances. Advances is money lying in somebody else's hand, which it is like cash in hand. So if it is not in the nature of cash in hand or bank, it is not an advance. It might have been paid as an advance under a contract, but it is a part payment, not an advance. Part payments can be claimed as application.
Sir, many people are asking about the presentation and recording. It will be shared with everyone, so you can stop asking question about the presentation and recording. It will be available to you. So, sir, the trusts are provisionally registered under section 12AB or 1023C or 80G. Only in that case, the date of commencement of activities have to mention.
Yes, that we already mentioned in the presentation.
Sir, in case of educational institution, there is a corpus fund of rupees 20 lakhs appearing in the balance sheets. It is coming from 20 years back. Can this be transferred to the general reserve fund?
For all technical purposes, this is not the corpus for which you are eligible for set-off of deficit. Now, technically, corpus is a general fund which is not subject to application. So the 15% you accumulate every year is your corpus fund because it is an indefinite accumulation. So whatever is available with the organization without any condition of spending is the corpus of the organization. It is a disclosure. If the organization wants to disclose, then it will be kind of a long-term general fund. General fund, normally we classify the funds which are likely to be spent in case of contingency or some other purposes. So normally as a disclosure, general fund is not a recommended practice, but the organization may use any other nomenclature, merge them together, that there is no legal bar.
Sir, if there is any receipts from the redemption of mutual funds, how they are to be reported and whether they are to be considered for 5 crore limit or not?
Redemption of mutual fund should be treated in the light of the capital gain. So you treat them as any other asset. And the way you would have treated a capital gain related issue, and accordingly we have already discussed that how to complete the meeting, that the same thing will apply.
So if a government grant is received for specific purpose, whether that is to be considered for 5 crore limit?
A government grant received for specific purpose, I think under section, the subclause to section 224 should be treated as income. So government grant is no longer to be treated as a legal obligation. So it will be a part of income and a part of 5 crore limit.
Sir, if the records of the branches are maintained at head office, whether that fact under rule 17AA is to be intimated to the assessing officer?
Suresh,
what is the issue? Issue is not clear.
Sir, the head office related accounts are maintained at registered office and the branches related accounts are also maintained at the head office.
That is centralized accounting system is there.
Yes.
So if the centralized accounting system is at one place, then the accounts are said to be maintained at registered office.
Sir, if a person has uploaded a form 10BB, even when he was having a FC grant, now can he revise and upload form 10B?
From my experience, there is no system of revising. He can upload a new form, I think.
So they can upload a new form 10B.
That can be, yeah.
Is placing a new bank FDR out of current year's income can be considered as application of income?
No. Unless it is reinvestment of sale of capital asset.
Sir, if NGO has already carrying on activities but has not obtained registration in old act, but have obtained provisional registration, what will be the date? I think already explained. Sir, is the audit report in 10B, 10BB has to be signed by the same chartered accountant who has done audit under Charitable Trust Act or a Companies Act, or can it be done by some other chartered accountant?
It can be by other accountant as well. There is no specifically mentioned that the same auditor has to do. The word used is chartered accountant as defined under Income Tax Act. So who can do the audit? So they are not saying the same statutory auditor has to do the same.
Sir, if the capital expenditure on purchase of computer hardware and software for use of society will be deemed as application of income?
Yes, capital expenditure can be claimed.
Sir, a Section 8 company was accounting project grant as income to the extent utilized and balance was shown in current liability. For financial year 20 to 23 onwards, they wish to fill ITR on cash basis. Is it correct to show brought forward unutilized grant as current year income and accumulated under Form 10?
The amount which was not received, it was received earlier, not shown as income. It was received earlier. So now, because it is a restricted grant, the organization would be advised to claim it as a restricted amount because it is in the past assessment year. In one or two cases, we have explained to the income tax officer, including CPC, that the restricted grant were neither treated as income nor application, and they have accepted it. So treating the money which was not received in current year's income will only compound the problem. Suresh ji, what is your advice?
Actually, you are rightly saying, but in some cases, as a practice, they recognize the income to the extent of utilized. So every year, some past grants are recognized as income, and the new grant to the extent of utilized. So if that is the consistent practice, I think to that extent they can submit the income to 60 lakhs, and from the current year they can have a practice of treating the entire restricted grant as income in the same year itself.
Sir, if a donation has been received from NRO account of NRI, whether that will be considered as FC grant for filing Form 10?
No, you have to see that whether that NRI is holding an Indian passport or a foreign passport. If the NRI is holding a foreign passport, it doesn't matter from which account the money is coming. If it is a foreign passport, it is FC. If it is an Indian passport, then it will be a domestic receipt.
Sir, the specified person under 13.3, even if there is no transaction, even then the name of all those persons are to be reported.
List has to be given. There are two separate rows.
Sir, now we'll just take last 3-4 queries because we are already have a time constraint. There was a query in the morning. I think we already discussed about it. A person has took bank loan and there was one-time settlement. Now that whether the repayment of such loan will be allowed as application of income.
Now, under the explanation to the section 11.1, old loan repayment, it is not about the repayment of loan. The Act says that the application which was made out of loan is allowed at the time of repayment. So now the Act says that application which is more than 5 years old, it will not be allowed. 1. 2, all application prior to 2021 will not be allowed. So now, in this case, it will not be allowed. Another thing one should be mindful in case of an OTS with bank. if the interest was claimed as application in the past and this entire interest amount is waived, then that interest amount will be treated as income and it can be claimed to be set off. But now if it is behind 2021, then it will not be treated as a set-off will not be allowed, but the auditor can claim that it can net off amount up to 2021, all the interest. So the interest beyond 2021, which was claimed and waived by the bank, it has to be treated as income.
Sir, I think we have already crossed the time limit, and because it will not be possible to answer for all the queries, I think we will circulate the presentation and recording of session. That will be very helpful for everyone. But since these forms are new, and as we discussed, these forms are amended after 50 years. To incorporate the amendments of last 8 to 10 years, these forms are amended after 50 years. Because people are looking for the guidance. They are looking for the guidance available to fill these forms. Even the institute has not released their technical guide or guidance note, which can help them to file. Sir, just we are concluding the session. If you can give last Guru Mantra to the people that what they should do and complete their audits within the time limit, and so that the exemption of the trust is not lost at least.
Then what we felt that this form is very specific and very technical, and it does not provide any space to the auditor to express his opinion or discretion or judgment, because most of the columns are very specified. And if you say yes, then the other columns will open up. If you say no, the other column will not open up. But the few major issues which we have already discussed, but maybe quickly one or two, I will say one or two, maybe Sureshji and you can put up, is that the organization suffers if you say that there was 12 maybe 4 violations, specified violation. If the organizations will suffer if you say that there were benefit given to specified persons, the organization will suffer which if you say that section 12A conditions were violated. What we will say that the auditors should not get rattled with it. Nothing has changed. The law has not changed. What you did last year, you do this year. A form, because if you get rattled and you file a different form, then you will be admitting that you did some misconduct last year. Because if you are saying that there was benefit given this year, then you are admitting that only because of the form was not given. So nothing has changed. The form has created confusion and complexities. Unless you have reason to believe that the benefit was given, the way you have been auditing, you do it audit. Be careful in case of specified document, because this rule 17A is of new origin. So why you think substantively books of record and audited statement are being prepared? So the books and other for forming your opinion, please prepare a note and write it in the audit report. Specified person, take something from the management. Books of record records, the places which you have not visited, take a certificate from the management. So make the management take ownership of many of your decisions. And many categoric answers which you are giving, please put it in the audit report that you have taken based on, for instance, you are saying that no benefit was given to specified person. Some assessing officer may find a particular voucher which is clearly a benefit. So in the audit report, you say that based on normal auditing principle, that means you have not done a forensic audit. You have not gone through 100% of the vouchers. So under normal auditing principles, we did not come across any benefit given. So those kind of disclaimers you put in the report, otherwise you may land yourself in problem in future. So these are few of the things, whatever we came to our mind, we have already put into the presentation. We will be available for further explanation if some queries come. So these are few of the thoughts which are coming to my mind. Quickly, Sureshji can also put his thoughts.
If I can add two things. We must have a detailed understanding of section 11, 12, 13, 215, 100 BBI, BBC before we deal with this form. Secondly, this forms is nothing but the working sheet. You are earlier you are also reporting the total amount of application, but now all the working sheets which you are preserving as a working evidence, now that becomes part of the form itself, and that creates the problem. So now the working sheet becomes the part of the form. Now very number of subjective issues. I think what Manoj has said, we have to now use of because now the time is passing. 30th September is the last date, and we have to conclude the audit. So we have to use this audit observation in the main audit report. Is a way forward as a protection to the auditor wherever he feels there are subjective issues and the issues which can be challenged at a subsequent date, to use very judicially that observation before he completes the report.
I think, thank you, sir. As sir has suggested that these all things were a part of your normal computation procedure and ITR 7. Only thing is now they are incorporated in your audit report forms, which are to be certified by auditor. That's where what is causing problem to everyone. And somehow the auditor has been put into the shoes of the assessing officer, where we have to take judgment on the various issues, right? So you should clearly define your responsibilities of the management and auditor in your audit report, as well as whatever position you are taking, give your observation, qualification, and disclaimer in the audit report format to save your skin. That is I think the correct approach to conclude the audit for this year at least. Right. From the next year, we will have a sufficient guidance available in the meantime from the department, and the necessary changes can be made in the forms in the next year. I think with these words, we can conclude today's session, and the recording of this session and the presentation will be circulated to all the participants. Thank you, everyone. Thank you so much.
Thank you,
sir.
Thank you.